So joining us now from the White House is Coinbase CEO Brian Armstrong, along with our own Emily Wilkins. Emily, take it away.
Thank you so much, Morgan. Brian, thank you so much for being here. You got that shout out, of course, from the president. Talk to me a little bit about what this stablecoin bill becoming law is going to mean for Coinbase.
Yeah, well, this stablecoin bill passing is really a financial revolution for America. It means that crypto can finally start updating the financial system, especially for our payments, which are running on these creaky old systems that are decades old. Now every payment in our economy can be fast and cheap and global, under 1 second and 1 cent anywhere in the world. Well, I think now that we have clear legislation, we're going to see the Fortune 500 really start to adopt stablecoins.
Everyone is going crazy about the Genius Act, and you might be asking yourself, what is a stablecoin? Why would anyone use it? And what does it actually mean for you? So let's talk about it. Have you ever had to send money and pay an egregious fee to do so? Or maybe you've been trying to receive a transfer in the past and it just took days for it to actually clear. The worst is if you're trying to send money abroad, maybe to a friend or family member, and half of it just disappears in fees. Well, this is normal. And whether you're a freelancer just trying to get paid, or a small business trying to pay your contractors, or really just someone trying to send money to a loved one, the system that we have today makes this way more expensive and way harder than it really needs to be. The entire money movement system that we have today is built on old infrastructure, and at the heart of that infrastructure are banks. Most people think of banks as one thing, but really banks are a bundle of different services. So you go to a bank to store your money, also to send money, or to convert to a different currency, and most importantly, to borrow. And now these services are bundled by necessity, not because it's the best way to do things, but because it's been the only way to do things. And over the past decade, that has been changing. Blockchains and stablecoins have actually started to break down this bundle of services that a bank offers. In the US alone, there are millions of people who are either underbanked or unbanked, with 1 in 6 households falling under that category. And across the world, that number is over 1 billion people that still don't have access to just basic financial services. And it's not because they don't want these services, it's because the system today doesn't necessarily serve them. And in these situations, people will turn to these high fee services like payday loan offerings just to cover their basic needs, or they'll just go without. Blockchain and stablecoins offer a new on-ramp into financial services, where instead of having to go to a physical location or even just to ask anyone for permission, as long as you have access to the internet, you can potentially have access to financial services as well. Banks and other traditional financial service providers don't charge the fees that they charge because what they're offering is just so expensive to deliver, but more because they operate within a tightly controlled system and there's little competition within that system. So when you need to send money or use a financial service, you're stuck with a handful of institutions that have exclusive permission to actually offer those services. And that problem is only getting worse because in the United States, the amount of banks that we have is declining rapidly. In 1984, we had somewhere near 14,000 banks. And now in 2024, that was down to 4,500 banks, which is a 70% decline over a few decades. That consolidation gives fewer banks more rent-seeking power, meaning that they have an opportunity to extract value rather than providing more for their customers. Blockchain and stablecoins completely flip the script on this, where instead of needing permission from a few institutions to move and store money, there's actually a global competition to create open networks that anyone can use to accomplish those goals. So let's break down what a bank actually does and how blockchains and stablecoins are changing that. The first thing is that at a bank, you can store your money. Well, on a blockchain, you can do the same. And instead of having to go in and set up an account and give a bunch of documents, you can just have an internet connection and set up a digital wallet. Secondly, at a bank, transfers can take time and also can be expensive, especially if you're sending money across borders. On a blockchain, you can actually send money instantly and with really low costs, depending upon the network that you're using. Third, let's say you live in Brazil, but you want to get access to US dollars. Well, in Brazil, you're going to have to jump through some hoops both with the banks and with the government in order to get your hands on dollars. Whereas with a blockchain, you can actually access US dollars without a bank or without any institution in the way of you getting access to those dollars. And then there's borrowing and credit. At a bank, you have to fill out an application, apply for a loan, and if they have reasons that they want to reject you, then they can. Whereas with a blockchain, you can actually get a loan based upon the collateral that you put up on that loan. And as long as you have that collateral, then there's no other reason why you cannot get access to that funding. Think of a bank as a bundle where you have to have an account to access any one of those services that we outlined. Whereas with a blockchain, you don't have to get approval from any institution to do any of those things that we went over. Over the past decade, we've seen fintechs and neobanks pop up to sort of address these issues. So you've got companies like PayPal or Revolut, and then Wise, or even a SoFi, who have come in and tried to unbundle these services that traditional banks offer. But the most powerful force that we've seen in democratizing access to financial services and money has definitely been blockchain and the stablecoins built on top of these blockchains. So how does all of this work? A blockchain is a network, but you can think of it like a money database. It's kind of like the internet, but instead of just for information, it's also for value. Blockchains are maintained by several different computers that are called nodes all over the world. So no one particular computer is actually in control of the network. They just work together to verify transactions and secure the network. So because of that, there's no institution or individual that can control the network. No one can alter the history of the network, and no one can stop it. So it runs 24/7. These networks are maintained by these computers or nodes, and these nodes are maintained by people. These people are offering up resources. They're putting up their capital by buying the computers. They're also using electricity to continue to run these computers, and they're using their time to do this for the network. And in return, they receive tokens like Bitcoin or Ethereum for securing the network. Nodes within the network that provide resources to earn tokens are called validators. And these validators can be looked at as like an oil producer who goes out and digs up oil from the earth. And as they do that, they then sell that oil that they get in order to cover their costs and grow their operations. For a miner or a validator, it's the same exact thing, where you're providing resources to get the Bitcoin or an Ethereum, and then you're going to sell that on the open market to cover your costs. Because these validators and also different networks are all competing on a global scale, there's a race to minimize the resources needed in order to provide the service of being able to secure a network and send value over that network. So the cheaper that I can provide resources to validate these networks and secure it, then the more profitable I'm going to be as a validator. Now, in general, right, this creates a downward pressure on how much it costs to move money around the world as different types of mechanisms within these networks compete to see who can provide the most security at the lowest cost. So that's one half of how blockchains completely disrupt banking. You have these permissionless ecosystems that no one can stop you from using. It runs 24/7, and there's essentially a race to the bottom as far as the fees that are necessary to provide banking-like services. Now, on the other hand, blockchains also make money programmable. Imagine you want to lend your friend Bob $500, but only when he has enough money in the account to where you know he'll be able to pay you back. Well, with a blockchain, you can actually code that logic into the system. And so you don't need a bank to do this. You don't need a lawyer to draft a contract. And instead, you just have code that executes on this that no one can stop and that anyone can use. Now, all of this sounds great, but we're missing one really important piece if this is actually going to work in everyday life. And that's going to be a stable form of currency. And this is where stablecoins come in. Stablecoins are digital dollars, but built on blockchains. And so you get all of the benefits of blockchain where it's permissionless, it's borderless, and it's fast, but without the price volatility of an asset like Bitcoin or Ethereum. Quick point. You don't invest in stablecoins, you use them. The whole point is that they stay stable in value. You can think of it like digital cash. And to be clear, you don't have to peg your stablecoin to the US dollar. There are other stablecoins pegged to the euro or the yen, and even some that are pegged to gold. You have two primary categories of stablecoins. The first being traditional custodial stablecoins, where you have a company that holds the reserves that back that stablecoin. And then on the other hand, you have algorithmic stablecoins, which are fully managed by code and backed by some sort of a collateral, usually that's on chain.
Well, if stablecoins are so powerful and amazing, then how come I'm just not hearing about them, and why isn't anybody using them?
Well, people are using them. For instance, in places like Argentina, where stablecoins have gone from something on the peripheral to something that is a lifeline. In places like Argentina, where inflation just a year ago peaked at 290%, citizens will use stablecoins to make sure that their purchasing power and their wealth doesn't just get eroded overnight. For years, Argentina had suffered from strict capital controls where you couldn't just go to a bank and get dollars. And so the only way for these people to get dollars was to use blockchains and get their hands on stablecoins. And Argentina is just one obvious example, but there have been plenty of instances of countries all over the world where the citizens will lose trust in their currency and then run to these stablecoins as a way to protect their wealth. All of this sounds like it would probably give JP Morgan and Jamie Dimon nightmares, right? Well, they've been preparing for this moment. Just last week, the US passed the Genius Act, and now the floodgates for stablecoins are open. The major players in the game right now are Tether, which is USDT, and they have over 150 billion in circulation. And then you have Circle, who creates USDC, who also went public earlier this year. They have 64 billion in circulation and are based in the United States. And then you have Ripple and their stablecoin RLUSD, and they just partnered with the largest asset custodian in the world, BNY Mellon, to custody their stablecoin as well. On top of that, you've had Visa and MasterCard very openly talking about how they've been preparing for stablecoins and how they're going to use them across their networks as well. So whether you're storing money, sending money, or looking for loans, these stablecoins are completely changing the game. They're fast, they're borderless, and they're built directly into the internet, which is much better for this global financial world that we live in today. But now, the way that all this works can be a little bit complicated. If you want to get deeper into the tech, like, subscribe, and let me know in the comments. But for now, click here for the next video.